Daily income trade alerts at noon Eastern. We're going to start off today's video reviewing our results over the past 11 months and then take a look at the key news today, including a little bit of a snippet from the Vice President's speech, which is live right now, about China relations and trade. Thank you everybody for joining us live, who is live, and if you're catching the recording, keep in mind there's some links in the description box if you do want to join our advisory. Okay, so the big thing to point out about our program is even when the stock market has significant pullbacks, we still deliver consistent results. Our target return is 1% a month. There's a few months where we don't hit that target, but overall we're very close to averaging a 1.5% return per month. So look at December, there's almost a 20% sell-off from top to bottom. We generated a 1% return. Go to February, stock market flew up over 12%. Well, we only made 2.2. February 1.7, March 2.7. April underperformed stocks 1.2 in May. Stock market fell 7%. We made 2.2%. June, we delivered a 3.2% return, less than the market. July, I was protecting our clients against a major stock crash because that's when the last trade talks were at a pivotal point and they came out saying everything was gravy. I didn't buy it. Come August, Trump raised the tariffs, crashed the markets another 7%. We made 1.8. September was a low month for us, 0.3, and we'll see how October shapens up. Here's our current recommendation for how to follow the strategy. SPY ETF, trade Monday, Wednesday, Friday. We take advantage of 3 option expirations per week. This represents a large portion of our portfolio. On Tuesday, we have a emerging markets position. So this is only 1/3 the size of our U.S. equities position. And again, it only trades Tuesday at noon Eastern. On Thursday, which is today's trade alert, we play the bond market. And that's really our secret sauce. That's how we're able to generate great returns despite what equities are doing. We usually have around an even ratio of stocks to bonds. And that's how you can bulletproof your portfolio in retirement. And I only like to be long gold when we have an environment where the interest rates are headed lower, which we have. And there's a belief of quantitative easing ahead. So we've been playing gold all year with that belief, considerable returns in that portion of our portfolio. And now we're starting to see the QE come in. So the last ingredients that we need for gold is just some fear. And guess what? We got a trade war underway. So that'll certainly come up into our portfolio at some point. Now for some of you that want to have less work, higher returns, more volatility, this portfolio does outperform, but it comes at a price of greater volatility. So with the last setup, our maximum loss in a month was only 1%. We've averaged 1.5. With this setup, your maximum loss would be closer to 2%, but your potential return is nearly double. So it is a much more profitable setup, only requires $35,000, and it is 50% equities, 40% bonds, 10% gold, target income of $350 per month per $35,000 invested. With this setup, you would have 400 shares of emerging market to trade Tuesday at noon Eastern only, and then 100 shares of the TLT to trade noon Eastern Thursday, then a buy and hold position in GDX. Our simple 4 ETF portfolio is extremely diversified in all you'll need for your retirement income. Our goal is income and safety, not growth, speculation, or hopeful investing. You can simplify your holdings, reduce your risk, get better results with less work, and weatherproof your retirement portfolio. Here's what you'll get. Easy to follow daily income trade alerts Monday through Friday at noon Eastern via email, text message, a daily 1-hour video, that's this video, teaching you how to place the trade and the thinking behind the trade, An optional spreadsheet just like ours to track your results with tutorials, and the promise to protect your portfolio, pick up the low-hanging fruit, and target a return of 1% per month. And attention non-members, we have an offer of the week with 3 spots available for a 60% discount. This deal ends 10/25, that's tomorrow. Call Dean 505-322-7515 or go to the description box in this video to apply for our advisory program. Now, if you're watching this video after the bell, your free trial has expired, so you're getting the content delayed. If you don't want to miss out on tomorrow's trade alert, call Dean right now, 505-322-7515. This is our disclaimer. I'll leave that up for a minute, and we'll jump into today's trade alert and the most topical content I've collected over the last 24 hours. All right, so let's take a look at our trade alert today. If you're wondering how we're able to generate such consistent returns, the catch is we're not going to outperform the S&P 500. The good news is every time the S&P 500 pulls back significantly, you're not going to have a heart attack. And it's because we have a large position in the TLT. Now, in about 50 minutes, I'm doing a live webinar where I'm going to teach you in depth how this strategy works, why it works, and how simple it is to just overlap the TLT and SPY together to have very, very few losing periods. So let's take a look at our trade from Thursday through Thursday, that's last week through today, and look at the results. And like I said, I'm expecting after that phase 1 trade deal came out with a positive note that we would generate the bulk of our profits quite likely through the end of the year from our equities positions, but that there was limited risk on the downside for the TLT because when we look at the big picture, Germany slipping into a recession, China and US are both injecting massive capital into to their repo markets. They're both starting up QE officially in the coming months. And so most likely interest rates are headed lower, which is bullish for the TLT. Plus, every time something goes wrong, either with earnings or with trade talks, we get a huge boost in return from the TLT. So it acts as our insurance policy against our large equity position. And clearly, the markets are in a big bubble. So if you don't think that's the case, then I've got news for you. But let's take a look at the results of this trade. So no terrible news came out in the last week. In fact, it's all been relatively positive. Yet our TLT did sneak up 30 cents. The option collar, which prevents any major risk. Now, I do think this is a relatively safe position considering where the world's at. World GDP has crashed from 3.8% a year ago to 3%. And so this is a combination of the trade deal tensions, plus China is just running out of debt to spend, so their growth is slowing rapidly. In fact, it's crashed from 14% to 6% with the most recent print, the worst print in 27 years. So there's a lot of reasons to own the TLT besides just trying to have a nice, clean, smooth 1% return per month. So the option collar is really just in case something terribly wrong happens out of nowhere that would cause the TLT to fall significantly. So we lost 25 cents on the option protection. We made 30 cents on the TLT, net gain of 5 cents. But meanwhile, our stocks have been creeping up. And if we look at this month's return, which started off at 1.1, the fastest gain in 3 days because of the fear of the trade talks breaking down. Then we had the surprise come out that, oh, everything's lovely. We're doing a phase 1 deal. And that caused our TLT to sell off significantly, but it's since rebounded as our equities have rebounded. And so we're now only down 0.1%. I suspect we can hit a profit on Friday and generate positive gains next week to close out October. November and December should be very strong if this trade deal doesn't break down. So we'll take a look at what's going on with that in our key news summary. Okay, so here's our key news summary. China talks do remain positive, but there's a speech going on right now with Pence where he is criticizing China. I'm sure they won't like it. This was supposed to be delivered 2 weeks ago, but the Chinese demanded it was delayed while they were discussing this potential trade deal. So it's going on live right now. I caught half of it, and I'll watch the other half before our live webinar. So if you do join us live, I'll fill you in on that as well. But today they said they won't go beyond $20 billion a year in agricultural products for year one, which is probably fine. The farms are probably in bad shape. And in year two, they would jump up to that $50 billion a year target. So are they just sort of dragging their feet again and trying to delay tariffs? Or are they really serious about a trade deal? We'll see. Navarro was on TV today saying that there's a huge section in phase one about IP protection. So this is interesting. The initial date they've set as a potential signing date is November 15th. So we'll keep a close eye on that. As far as earnings for our S&P 500 SPY position, Microsoft, most important, came out strong. Tesla is not an important position in our portfolio because it's only like 0.5% in the SPY. But a surprise, it came out strong. But, however, 3M, Boeing, Caterpillar, and Twitter all came out with weak earnings. So overall, estimates have been beating, and we have a very dovish Federal Reserve right now. So I want to remain long stocks through this period of weakness, and we're using the options market to help generate profits, even if the SPY trades relatively flat or in a small range. Which I believe will probably be stuck in the 295, 305 range until we start getting better information out about the trade deal. Now, what's concerning is the U.S. and China are injecting hundreds of billions of dollars into their banks over the past week via overnight repo operations, and Germany's PMI and employment is falling rapidly. So that's bad news. Good news for the TLT. And good news for us to have an accurate prediction of what the Federal Reserve is going to do, which is most likely lower interest rates and print a whole bunch of money. Let's take a look at how to execute today's trade. So if you took last week's trade, you do need to buy to close your 143 call and then sell to close your 138 put. So the call option we sold and took a credit in, so now we're paying a debit to get out. Now on the put option, we paid a debit to get in, and now we collect a credit to get out. This is what makes this trade much more safe than just owning these assets, what we call naked. The new trade alert is very similar. We got a little bit lower put option. We went from 138 to 137. You can see the expiration went from October 25th to November 1st. And we have sold the 143 call for a credit of 18 cents, and we've bought the 137 put for a debit of 26 cents. So overall, this option caller, which provides absolute protection to the downside risks on the TLT, cost us a debit of 8 cents. Now, if the TLT were to skyrocket, we would only capture a maximum return of $2.78 a share. Now, because we have twice as many shares of the TLT as we do the SPY, that's ample protection in case something shocks the stock market. The TLT most likely will generate a larger profit than we lose from the SPY, and keep in mind the SPY has a tight put option below it, which again is financed from selling a call option. So overall, this is a very safe way to play the markets. And there's only a few exceptions in history where this relationship between the SPY and the TLT breaks down. Now, our webinar, I'll tell you what the exception to the case is, what would ruin this strategy and force us to have to alter it slightly. So once again, I do want to throw out tomorrow we have a trade alert on the SPY ETF. And if you're not a member yet, consider calling Dean and talk to him about our special deal where you can get a 60% discount on our annual membership by 12 o'clock Eastern tomorrow. So call him at 505-322-7515. Let's take a look at the content I've collected that's topical and today. And a shout out to some people in there. We've got Ron, William, John. Good morning, everybody. Dean, Tom. Thanks for joining us live and saying hello. All right, let's take a look at the content I've collected. And then we'll get ready for our webinar, which is coming up in 40 minutes. Check your email for the link. This is an invitation to both our paid members and our free members. So we'll hope to get as many of you on there as possible. And again, that's every Thursday. Next week, we may push it to launch at 2 Eastern instead of 1 Eastern. But today it's at 1 Eastern, coming up in 40 minutes. The Federal Reserve is derelict in its duties if it doesn't lower the rate and even ideally stimulate. Well, they already are. Take a look around the world at our competitors. Germany and others are actually getting paid to borrow money. Fed was way too fast to raise and way too slow to cut. Stocks this morning are all up, including our gold miners ETF up 2.3%. LQD I'm looking at to get a signal for when equities may crash. The second this ETF starts to pull back considerably and sharply would be a very alarming sign. That would cut off the access to capital for corporations to buy back their own stocks. And on the same note, it's very correlated to the TLT. So if these two were to tank significantly, that would mean yields are skyrocketing for corporations to borrow, and that's bad news bears for equity. So that's our best way to judge of serious trouble. Here's a look at the SPY ETF. It is dying to get out of this $300 topping, and it needs a catalyst to do that. I suspect we'll be bouncing between 295, 305 without any terrible earnings or any kind of trade talk shocks to the market. We've got a potentially bullish catalyst on October 31st with the FOMC dropping interest rates most likely 25 basis points and announcing a one-time injection of maybe $300 to $500 billion into the banking system. That's Goldman Sachs' rumor. We'll see what they actually do. They've already added $200 billion to their balance sheet and increased the repo significantly today. So there's clearly some trouble in the banking system. TLT, I do believe, is traveling much higher unless there is nothing short of a miracle to recover China's slowdown. So we've got, not only is China inevitably going to have a crash at some point, now the U.S. is ready to prick that bubble without a trade deal. So we get the phase one trade deal, the bubble goes on. But if we don't, most likely we could see a significant slowdown, and that would drive our TLT much higher than it is currently. We jumped into emerging markets after the announcement of the trade deal 2 weeks, and it has been traveling up rapidly. This is our Tuesday play, and I would be happy to play emerging markets to the downside if it does look like U.S. is ready to attack China in terms of trade, sanctions, and cutting them off of oil. We've been seeing them slowly but surely surround China in every way possible to apply pressure. And it's been hard to guess when exactly they would apply that pressure. That's why we have to keep our strategy open on the TLT and on the gold. Here's a look at GDX. So if we went back to the last time they did quantitative easing, 2009, it was after a stock market crash, but they started that towards the end of 2009, and over 2 years injected trillions of dollars into the banks, and guess what? Gold flew up rapidly. So I'm expecting something similar this time around. Just realized the problems a decade later are at least 3 times worse than they were in 2008. $288 trillion of sovereign debt, 16 trillion in negative territory. There are some big problems in the financial system. We're in a huge bubble. White House, Navarro, phase one of China deal adopts virtually entire chapter from May agreement regarding intellectual property. Beijing won't raise agricultural purchase until year two of the deal. So they'll be going back towards the 2015 levels to start, which is probably fine to keep Trump happy. Fed injects $134 billion into overnight repo, oversubscribed. Banks are out of cash. Every dollar is accounted for. What is hogging up their credit lines, we don't know. Germany slides into recessionary abyss as employment falls for first time in 6 years. PMI is below 50, as well as the services. Microsoft had strong earnings, strong revenue. Their cloud product Azure is just a money machine. This is our biggest position in the SPY ETF. Shout out to Jack Tan if you're listening to the video. He's been losing money on Tesla for quite some time and hit a massive win today on Tesla, unexpectedly turning a profit. Now, if we start putting big sanctions on China, that's going to be a problem because that's where they've got a lot of their money invested. Microsoft, this is all from Bloomberg, by the way. Microsoft is doing well. Ford slipped. Earnings overall are coming out decent, except for these companies that are very global and tied to China's growth, Caterpillar, 3M. Mark Zuckerberg was having quite a beatdown in Congress yesterday. Mainly is who is going to be responsible for the ads that run in their platform. Is it the advertiser or is it Facebook? Facebook's saying we're going to make sure you're a verified person so that we can hold you accountable for what you've posted. But beyond that, they don't want to do a whole lot of fact checking. WeWork's private valuation crashed from $80 billion to below $8 billion. This could potentially be part of the stress with the repo market. We know JP Morgan was highly tied to this deal. But it just goes to show there's a lot of private equity that's valued at extreme prices. These companies are all losing money. SoftBank and Tencent are among the worst in terms of printing massive money from their governments, getting it borrowed to their hedge funds and businesses, and then overvaluing just about everything they can get their hands on over the last decade. Lance Roberts is a big TLT fan. He loves to put out negative stuff about the stock market, but it is interesting to see the slowdown in trading volume. I would suspect we're going to see this pop up if we get a phase one deal. All the banks are going to cash, and they're generating huge profits on these long bond positions, which have gone up considerably this year, anywhere from probably 5 to 10% on the short end of the spectrum, and on the TLT, on the long end, it's up some 20% this year. So huge profits for the banks. There's no way they could have sold all these to the market. So they've been trying to press the Fed to come in with QE. And perhaps that is why they stopped loaning money out overnight to get the Fed acting. Meanwhile, foreign buyers love our debt. As we create record deficits, that's good for the stock market for now. Elizabeth Warren continues to dominate the Democratic ratings. Wall Street billionaires shouldn't be paying a lower tax rate than a middle-class family struggling to get by. It's time for a 2-cent wealth tax on the wealthiest families in America. If you have over $50 million in assets, she wants to take 2% of that away per year. If she really becomes the nominee for the Democrats, this will be very interesting. She does have quite a pitch that I think doesn't overlap with Trump's crowd, so that might turn out to be quite a battle. But the problem is she's not going to have any of the big money behind her, so we'll see. They'll probably do everything they can to try to ruin her chances before we get closer. And now there's rumors that Michael Bloomberg might run or Hillary Clinton. Meanwhile, Democrats are hell-bent on impeaching Trump. There's all sorts of drama about secret meetings. The GOP lawmakers are going into their private meetings and storming the doors. It's a whole circus act that's been interesting to watch. Meanwhile, Google has created a supercomputer that does a 10,000 year calculation in 200 seconds. That thing must get hot. I was curious if this could potentially unlock Bitcoin keys, and from what I can learn so far, it still is not fast enough to do that with current encryption level. So good for our portfolio with a good Google position in SPY as they continue to innovate and are one of the biggest investors in R&D in the world. Here's something that's not part of our portfolio, but just a warning for anybody loaded up on pot stocks. This is a really amazing statistic. Turns out most people who wanted pot were already finding ways to get it. Supply grew 100 times, but demand only grew 2 times. And just shows the reserves that have not sold as they grow and grow. So it might be a good short opportunity when credit gets tight. Those could probably crash significantly. 2020 election shaping up to be an expensive run. Bernie is very good at raising money, but so far Warren is out pulling him. Pete Buttigieg is doing well. Very impressed with his with everything he's been putting together so far. So we'll see how this all shapens up and if we get any new surprise runners in the coming months. All right, guys, so we do have a live webinar in 30 minutes. Hope to see you there. And if you do catch this video at the close, that's because your free trial's expired and it's time to upgrade. Call Dean at 505-322-7515. He's got a 60% annual discount. The deal ends tomorrow at noon Eastern. Also look in the description box for a link to access that. Thank you, guys, and we'll see you in about 30 minutes.